Statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. Now, let me introduce you to the management participating with us in today's meet. We have firstly Mr. Satish Verma, who is the Executive Director of the company. Welcome, Satish ji. As an introduction, Mr. Satish joined Fermenta Biotech Limited when it was called DIL earlier, way back in 1994. As the executive assistant to the then managing director. In this role, he garnered extensive operational management and legal experience across the full scope of the company. In 2003, he joined the board of directors of Fermenta Biotech Limited. And in addition to his executive board duties, he is also a member of the stakeholder relationship committee. Moving on, we also have with us Mr. Sumesh Gandhi, who is the CFO. Welcome, Sumesh ji. Mr. Sumesh is a qualified chartered accountant and has a master's in finance. He has over 24 years of experience in business funding, planning and analysis, financial accounting, business restructuring, commercial operations, and general management. Prior to joining FBL, Sumesh ji was associated with Morpheus Life Sciences Private Limited as the CFO and Executive Vice President. Now, without any further delay, let us begin. First, I'd like to start with Satish ji. Satish ji, you're a veteran of Fermenta Biotech Limited. Across the company's 5-decade journey, and also, coming to a brief overview to what the company has transpired into today. Over to you, Satish ji.
Thank you so much for the wonderful introduction, Anuj. Good morning, everybody, and thank you for sparing your valuable time today. I will straight dive into the question that Anuj has put across. To give you a brief history, although it is over 5 decades, I will try to be as brief as possible. The company was founded in 1951 by Dr. D.V.K. Raju, who was a technocrat and considered as one of the pioneers of the Indian pharmaceutical industry. When this company started, it started in the name of International Franchisees. It was contract manufacturing formulations, that's the way they started. But by 1963, Dr. Raju formed a joint venture with Philips Dufar of Netherlands. Philips Dufar also was the first company in the world to manufacture vitamin D commercially. So this joint venture happened in 1963, which changed the company from a contract manufacturing of formulations to a full-fledged pharmaceutical company with its own formulations, brands, etc. Not only this, but also because of Philips Dufar, we also started by late 1960s, we started manufacturing vitamin D as well for the domestic market. I think for a long time, 50% or more of what we used to produce was for our own formulations itself, apart from catering to the rest of the country's demand. While we continued to manufacture vitamin D, the formulation business was prospering. In 1976, the company got listed on the Bombay Stock Exchange, and the name of the company at that time was changed to Dufar Interfran Limited. Dufar from Philips Dufar and International Franchises became Interfran, and it was rechristened as Dufar Interfran Limited. The company grew very well. It built its own reputation as a leader in the pharmaceutical industry, had strong gynecology, gastroenterology products and brands. We also, in the process, had built very, very big brands like Crocin, Lactocalamine, etc. In around 1980, Philips Dufar was taken over by Solvay, who then became our joint venture partners here in India. Solvay took over Philips Dufar globally. By the mid-90s, Crocin and Lactocalamine had become OTC brands, and the company decided to divest those two brands, and in 1996, Crocin and Lactocalamine were divested. Post that divestment, the partners decided to separate, i.e. Solvay and the Indian promoters, Dr. Raju family wanted to separate. So the company was demerged into two. The entire pharmaceutical, that is the formulation business, was hived off into a new entity, and all the shareholders got mirror image except the promoters exchanged their shareholding. This resulted in Solvay taking over majority control of the pharmaceutical business and the Indian promoters exiting from that business. And the remainder of the business, the Indian promoters became majority and Solvay exited. Now, what remained in the rest of the business was assets, which we still have, and vitamin D3 limited to the domestic market, as well as we had one more API called Fineramidol, which is a muscle relaxant, which is sold in Turkey. We manufacture the API, the formulation is done in Turkey by a company and sold there under their brand name. So this was what was left after the demerger, the remainder of the company, and the company was rechristened as DIL Limited from Bufar Interfran Limited. It was rechristened as DIL Limited. This happened in the 2000. At that time, DIL also had 35% stake in Fermenta Biotech Limited, which was at that time a purely enzyme manufacturing company. They used to manufacture penicillin G, SLS enzymes for the antibiotic manufacturing industry in the pharmaceutical sector. Fermenta was the first one to introduce these enzymes in this country and converted all the manufacturers of amoxicillin and ampicillin into an enzymatic step process from a chemical process. So given the situation after the merger and the 35% stake in Fermenta, it was decided by the promoters that we should consolidate all the manufacturing business into one company. So by about 2003, DIL took over a complete majority of Fermenta and licensed out its manufacturing and production technology of vitamin D3 and Fineramidol to Fermenta Biotech Limited. Fermenta at that time, when it was established in 1986, it had its manufacturing facilities in Kullu, Himachal Pradesh. So that's where we started manufacturing that. In the initial years, as we were restricted on vitamin D3 to the domestic market, I think that focus was on building up the enzyme business as well as improving the Fineramidol API business. But by the mid 2005-06 onwards, we started discussing with our erstwhile partners, i.e. Solvay, about us being able to manufacture vitamin D3 for the global market and to start exports. And post discussions with them, we started exporting vitamin D3 globally from Fermenta Biotech Limited in 2008-09, that period. Since then, it has been an exciting journey and growth. I think we have grown leaps and bounds. Our turnover in 2010 might have been about 40 crores to now 300, 400 crores that we have crossed in the recent past. We must be among the top 3 manufacturers. We are one of the largest manufacturers as we stand today globally as far as vitamin D3 is concerned. Post that, by 2016-17, looking at the success we were having in the global market and the acceptance for our product, everything, we felt the need that looking at the opportunity that the growth opportunity that Fermenta had, we felt that it would be better if we merge DIL with its rich assets and Fermenta with its strong revenues together for us to be better able to better leverage the strengths of the entire organization for our growth plans. We knew that we will be requiring investments into manufacturing units, etc. So this process was completed in about 2020. I think that is as brief as I can get. If Anuj, you want me to explain anything further, please let me know.
No, sir. Thank you for that. I definitely dive deeper into questions further. So let us, go straight into our key product of vitamin D. Let's. Can you briefly give us an overview about vitamin D? For some of the laymen's here today, and the importance of it for the human body. Also, if you can then further elaborate on the global market of vitamin D, the size of it, the growth run rate it has had in the past, and also what is the future scope of it. Especially, in light of the whole COVID-19 pandemic, there have definitely been a lot of, medical journals prescribing this particular vitamin. So, if you could just educate us on that to start with.
Thing. Um, I think first I will talk about vitamin D itself. I think people are still understanding more and more the importance of vitamin D. It's not like no other vitamin. It has got hormone-like role as well. Let me just talk in basic, very layman terms. Number one, I think we all should know that vitamin D is the only vitamin that our body has evolved to produce. It is that critical an ingredient in your body. Now, this should explain that how critical it must be that our body is producing vitamin D for its health and sustenance. Vitamin D is produced by sunlight falling on your body, the particular UV rays of the sunlight transform the cholesterol or the further ingredients that are there into vitamin D in your body, and then that is how the process works naturally. To put it simply, this is what we replicate in our plant. It is called photochemistry. The starting material is cholesterol, which is derived from sheep wool. Until about 10 to 12 years back, vitamin D was commonly related with absorption of calcium, bone problems, osteoporosis, arthritis, restricted to that kind of indications. But even before COVID, for the last 10 to 12 years, I think there has been so much research done on this molecule. Must be one of the very few molecules that has been researched so much over the last 10 to 12 years on its role in general immunity in the body, how it can help us reduce the risk of lifestyle disorders. Respiratory diseases, it is not new just because of COVID, but until even before COVID, most chest physicians would also recommend vitamin D because it plays an important role in your respiratory fighting strength as well. I think over the last 10 years, every year, maybe more than 3,000 articles per year might have been published. Now I think it will just keep growing more and more because of its relation to COVID. The number of studies that are currently being done and already done that is showing the benefits in fighting COVID is more and more evident that D3 plays a role. It is no longer a theory or something like that. You were also asking me about the industry and its growth. Basically, vitamin D3 not only goes into the human usage, but also towards the animal usage. Typically, most vitamins, including vitamin D and most other vitamins, I think 80% of the volumes go into the animal feed industry. In terms of growth, it is difficult to peg, but on the human side, I think we have been seeing almost up to 10% growth year on year for almost the last 7-8 years or more. And on the animal side, it is under 5%. That would be about the growth part of it.
Sure, sir. Just to dive in further, you also mentioned that we are in your initial statements that Fermenta is one of the largest manufacturers of vitamin D in the world. So can you elaborate further on the market, the size of it, maybe the price trends, and you also touched upon the animal and human side. If you could further, maybe bifurcate that and explain, how big either of those side markets are, if you can. So yeah.
As I was mentioning earlier, D3 goes for both human as well as animal. Animal will be about 75 to 80% of the volumes go there, and human about 20 to 25% of the volumes go into the human. In terms of market size, again, I told you that it is a little difficult to peg. It is looks like a one product, but it is actually one molecule with multiple formats of the product that go for different usages. But if I have to generalize, as an API, vitamin D3 API, we estimate the market to be more of about closer to 35 metric tons. And on the animal side, which is also sold in a powder format, that particular powder format could be closer to 10,000 to 12,000 metric tons. Please don't try to compare human volumes of 35 metric tons and animal of 10 to 12,000 metric tons. They are not apple to apple comparison. You cannot compare it straight away. As regards the price trend, human has been always stable with a steady growth, both in volumes as well as in average realizations and prices. On the animal side, it is pretty volatile. Most of the animal side volumes are dominated by the Chinese players, and we feel that due to supply side constraints they have from time to time, the animal feed prices fluctuate a lot. They're highly volatile.
Okay, sir. Thanks for that. Now, could you now maybe explain to our viewers about the manufacturing process involved in vitamin D3? You talked about photosynthesis. You talked about getting cholesterol from sheep's wool. If you could just explain this, it sounds. For laymen's like us, it sounds very interesting, but at the same time, completely like rocket science. So how does, if you can explain this process of manufacturing, also then if you can touch upon our facilities, we've recently backward integrated our plant, so maybe about that, and also our capacity expansion plans. And while you're doing that, if you could explain what are the entry barriers for manufacturing this product. Although it seems like something very simple, a single molecule, why are there not many players in this? So if you could just touch upon that as well.
Sure, I'll try my best to explain it briefly. First, the manufacturing process of vitamin D3 itself. The starting raw material for manufacturing vitamin D3 is cholesterol. This cholesterol is obtained from sheep wool. When you shear the wool from the sheep, and before it goes to the textile industry, it's washed. And in this washing process, wool grease is extracted, and from there, the cholesterol is extracted. The sheep is not killed for this process. Here, I must also mention that China used to, until July this year, it was officially allowed to use animal pig brain matter, bone marrow matter to extract cholesterol for the purpose of manufacturing vitamin D3. This has been banned since July this year. I must mention that. We never were using those raw materials. We always used cholesterol from wool grease. This cholesterol is then passed through various stages of chemical and other reactions. One of the most important stages being the photochemistry. This is where the molecule actually is formed. As I was saying, we replicate what the sun does on your body. So we pass the intermediate material to through UV rays, specific UV rays. We call it photochemistry, and then that is where the molecule is formed. Up to this stage, actually, it is still available to be used for the animal feed purpose or the human forms purpose. Depending on the market demand, situation, and visibility, we then decide which direction it should move from there. So the plant is also fungible until that stage. I will quickly talk about our plants. We have currently one manufacturing plant in Kullu, where we do not only vitamin D, but also our enzymes and phenyramidol, the muscle relaxant that we sell to Turkey. As soon as we entered the international market in 2008-9, looking at the acceptance and requirement for a new player, we immediately started constructing another plant in Dahej. It's an SEZ in Gujarat. This purely manufactures cholesterol, purely manufactures vitamin D3. We have also started manufacturing cholesterol in this particular plant starting this year, the current financial year. All our plants have all approvals, certifications required to sell in all the more than 50 countries that we are currently selling, including EU, almost all the countries in EU, USA, Canada. We even have registrations which allows us to sell our product in infant nutrition. So we have all the approvals and certifications required for both human as well as animal. We also have an R&D facility in Thane. We have more than about 35 people in our R&D facility there. As far as manufacturing our own cholesterol, I think until last year we used to depend on outside cholesterol, but from this year onwards we are completely backward integrated and are able to manufacture our own cholesterol. This not only will make us more competitive, but also will make us self-reliant. That is more important in this day and age. In anticipation of the growth that is happening, and also with this COVID, the growth jump that we expect to happen, we have initiated an expansion plan, should give about 20% additional capacities to our existing capacities, and should be completed hopefully by the end of this financial year. Now, yes, the most interesting part of the question is what are the entry barriers? Why are there so few key players? I'll just try to touch upon few important elements which we think are a deterrent for any new player. First of all, outside China, there are only two players. That is Fermenta Biotech Limited in India and one more company in Europe. These are the only two companies in the entire world outside China. Vitamin D is a oil-soluble vitamin. All oil-soluble vitamins, including vitamin D, are highly volatile and very difficult to handle. At every stage of production, not just at one particular stage or something like that. At every stage of production, they are very, very difficult to handle. It involves highly sophisticated equipment, which is not available off the shelf, especially photochemistry. Expertise on photochemistry, not only in India, but in the whole world also, it's limited. I would not say it's not there, but it is a limited expertise. So that's another deterrent. Since there is no off-the-shelf equipment available to do trials and errors, the initial investment itself for you to develop a process and validate it and all itself is a big investment. It is not going to be a small investment. for a niche market like this. In addition to that, you have more investments to be made when you get into setting up a plant. Again, that is also not a small investment. Now, by the time you do all this, I'm sure it's a long time that it will take. And in addition to that, then your regulatory approvals, etc., which are again time consuming. And the most challenging thing, of course, is to then enter the market where there are well-established players with a well-catered to market. I think that is also going to be a very big challenge. So these are the few important points on how difficult it is that I can mention. Whenever we went to a new location for a plant, we have also faced difficulties even after being producing this molecule for over 50 years.
Thank you, sir. That was very informative and interesting. So finally, you talked about expanding our capabilities. I understand that the company also has, plans to diversify its product portfolio. Could you elaborate on what is the strategy going forward and the company's vision in this game?
Sure. See, I think over the last 10 years, 10 to 12 years since we started exporting vitamin D3, we have now reached over 300 to 400 customers in over 50 countries. We have set up a good base and we will grow on that. I think now the company is poised to take its next growth step in terms of diversifying its portfolio, adding to the setup that we have already created in this whole exercise. We have chosen nutrition as a way forward rather than APIs or something like that. Nutrition and nutritional ingredients. It could include other vitamins. It could include minerals. It could include other supplements as well that are important for the nutrition industry. The focus of healthcare has to move to prevention rather than cure. I think this is more and more obvious with the way that we are realizing how fragile the entire health of the global society is. And what we are doing now, what are the doctors advising, what are our grandparents advising is healthy nutrition. You started right from cardas to vitamin C's to vitamin D to zinc. This is what everyone is advising, not medicine. They still don't exactly know what exactly is going to help you cure from a therapeutic point of view the COVID that has come. So this is a challenge. So nutrition is the most important to help us stay fit and be more on a preventive methodology as far as health is concerned. So the healthcare focus will be that. In fact, the Indian government has recognized this as a major problem. They are running various programs and are looking at scaling up of fortifying most of our staple foods, like for example, milk. Edible oils, I think maybe 70% of edible oils are already fortified. Especially the packaged ones, maybe 80% of them or 90% of them are fortified, I think. Milk, edible oils. They're talking about rice, fortified wheat flour, etc. Of course, iodine and salt, there is no better example than how it has improved the health of the nation after they fortified salt with iodine. So they are doing a lot of exercise on that. How we intend to increase this portfolio is by both, one, looking at developing and manufacturing a lot of ingredients ourselves, and also finding strategic partners who have good products in their baskets and tying up with them. In the marketplace, we have created a good base, we feel. More or less every company that is taking vitamin D will look at other nutritional ingredients because that is what is there in their portfolio. We have these relations that we have built with the quality and of our services. quality of our products, and we feel that there are very limited players also globally in this entire business. It's not that there are so many players like in the pharmaceutical segment. There are very limited players. I think with the credibility that Fermenta has built over all these years, I think there is space for Fermenta in this segment to not only enter but grow well, and the market is going to grow irrespective of COVID or no COVID. Anyway, people had started looking at nutrition and health and everything. There is a plethora of nutritional products. Internationally, and even in India, you're getting even juices and mineral water with vitamins added to it. So I think it's going to be exciting. Our plans are big. Our aims are big. We want to be one of the companies whose name will be mentioned if you're talking about nutritional ingredients. Currently, we would like to restrict our plans to the B2B space. We are not currently looking at any B2C space, but we feel confident that we should be able to make our space in this market.
Thanks, sir. Just as a follow-up on this, can you just give me some examples of the kind of vitamins you're looking at apart from to expand your product portfolio?
On our own, one of the vitamins we are looking is vitamin K.
Mm-hmm.
Then we'll be looking at some minerals.
Mm-hmm.
And currently that's what we are focusing on. Some minerals, some vitamins. We have tied up with a couple of companies in South America for bringing their omega fatty acids into this country. Astaxanthin, which is again a very important nutritional ingredient into this country. So we are currently working on a lot of them. So as and when we launch, we'll keep everyone updated, maybe through even our IR presentations that we come periodically up.
Great, sir. Okay, now before I move on to questions from the participants, I already see that there's quite a few. Just one final reminder that there is a Q&A button at the bottom of your screen. So if you have any questions, you can post it up there and I will ask them on behalf of you to the management as much as possible, time permitting. Before that, one final question, and this one is for Mr. Sumesh Gandhi. Sumeshji, we've had a great run last couple of years in terms of top line and bottom line margin improvement. So could you elaborate on what drove this exceptional performance until FY20? And then if you could also explain what happened in FY20 exactly that led to the decline. Lastly, what do you believe feel is a sustainable growth rate and margin number from here on? Over to you, Sumeshji.
Thank you, Anuj, and thanks to all the participants for attending and spending time with us today. I know it's a market hours and it's a bit difficult for everybody to be there, but I'm thankful to all the participants for spending time and hearing us out. Your question, the first part of it as to what happened and how did we see a growth which has come in till FY19, I will put it, and not in FY20 is what we have been saying in. Anuj, till 2016, we were predominantly more into animal side, and we weren't that focused, on the human side, and we weren't that much focused on the animal side. Post that, 2016, 2017 is when we had decided to also focus on the animal side of the vitamin D3. The reason one being it gives us huge economies of scale, considering the volumes which Satish had spoken about in animal side also, which is there. In 2017, the first quarter of the calendar year is when we had substantial increase in the capacities also coming in. And this helped us to cater to the animal side much better than we were in earlier scenarios, which is there. To help us out, luckily for us, during the period of say September or October of 2017, we suddenly saw a spike coming in the animal feed prices, and it started going on north. This also added to my margins and also my top line, which is there. Ideally, if you see, we have grown both on the volumes as well as the value side, both on the animal as well as the human side. It's been phenomenal, 10 to 15% CAGR over the last 5 years. If you see on the human and animal side volumes, which is there, and approximately 23 to 25% on the revenue side, which is there. So, answering your first question, this is something which has really driven the whole business, and where we have been able to improve our margins till 2019. Coming to your second part of the question as to what went wrong in, say, FY 2020, uh, I would say there were three major reasons which had impacted the fall in the margins as well as the sales in 2020. First is that there was an African swine fever which had plagued Southeast Asia and more so in China, where the population of pigs had to be culled. So around about 50% of the pig population had to be culled in China, which impacted the demand of animal feed to a huge level, which is uh, the second reason. What we saw is that in the second and the third and the fourth quarter of FY20, maybe the animal prices was it at its lowest level over the previous last 3 years. So it's not very low as to what it used to be, say in 2014-15, but yeah, comparatively pretty low to what we have seen over the period of last 3 years. This has also impacted our margin. Uh, the third most important thing which has happened is one of our major customers have had a technical difficulty in their plant, and the offtake of the animal feed from their side has reduced to a significant level, which is there, and that has also impacted my top line as well as the margins, which is there. Having said that, let me also put across, I would not say a word of caution or something, but I would love that my company or our company is being seen from a long-term horizon. If I was to see my 3 year CAGR, my 3 year CAGR may be much better on the value and the volume as compared to my 5 year CAGR. Because in a short term, you would always see that there would be a kind of consolidation coming in, kind of growth coming in. There might be some kind of depression coming in into the prices of animal feed or anything. So it's always better to look at a company, and more so our company, from a longer term horizon rather than in a shorter term horizon, and not think from a quarter on quarter basis as to what's happening. Let's see what's happening over a period of say longer period, and see whether there's a volume growth, there is a revenue growth which is kicking in the company or not. And let me assure you, we will see those things happening. Coming from your point of view as to what do you see as sustainable kind of a growth coming in over a period of say longer term, I will again say from a longer term perspective, I don't see we should have anywhere lower than a 15% CAGR over a long-term perspective, which is say 5 to 7 years, which is the growth. Plus margin level from an operating margin point of view, I think so sustainable level should be that it should be close to 22 to 25%. I don't think we should fall below that.
Great. So thank you so much for that. So let's move on to the questions from the participants. There's a ton of them, and I'm going to try to go through them as fast as possible, as much as possible. First question, is from Gokul Maheshwari. The market opportunity, I think, is already covered, but what is the cost advantage for India and within that with Fermenta? If you can talk about, does India have any kind of cost advantage vis-a-vis in manufacturing vitamin D and especially also Fermenta?
I think I will not be able to specifically mention as a cost advantage because of being in India. I would not be able to mention anything specifically on that matter. But as far as Fermenta is concerned, I think we have been manufacturing this product since the last 50 years. And especially over the last 10 years, we have become more and more efficient. Our R&D has been able to keep on increasing our efficiencies through process development, etc. I think we should be one of the most efficient manufacturers globally of vitamin D3. Now with the backward integration, I think it gives us much more advantage that we manufacture our cholesterol. So that should also bring in a lot of advantage to Fermenta, and especially with other sources of cholesterol being banned, I think we might be the only, within the vitamin D3 players, we might be still limited to how many people are backward integrated. Definitely the European company, which is DSM, is not backward integrated.
Okay. Let me take the next question from Vineet Bolinskar. He's asking, how true is it that European manufacturers are looking to shut down manufacturing and Chinese guys are struggling with cost? Any thoughts on that?
I do not have any information on any European player trying to shut down. I do not have any information. As far as struggling with costs is concerned, I think looking at the volatility of the prices that are coming from China, I think when it is at the lower cycle, everyone is struggling with costs. When it's at the higher cycle, they are better off. I think they are averaging maybe hopefully on that. For us, I think we have a good proportion of human side business. So I think we are in a much safer wicket. Even during the low cycles, it is not that we are struggling with costs and losing money or things like that.
Okay. His follow-up is, who are the major players in this, and do you have like some estimate of the market share across these players? So
see, I think obviously Zhejiang Garden Biochemie from China is the largest player with capacities and completely backward integrated. They dominate a good portion of the animal feed industry, maybe even 30% or above the animal feed industry. DSM obviously is another large player, which is a European player. He comes with a big basket strength. I mean, DSM comes with a big basket strength of multivitamins, premixes, most of the products they have. They also must be on the human side and on the animal side, they also must be having a similar market share. The rest is distributed between other players in China, to name a few: NHU, Kingdom Way, High Sound are some of the companies, and Fermenta. Fermenta must be closer to about 5% or so of the animal side market share. Coming to the human side, I think Fermenta enjoys a much larger market share, closer to about 25% of the global market share we must be enjoying as per our estimates. And maybe DSM will again have 30-35% global market share on the human side, looking at the size and strength and where that placed out of. This is broadly on the market share is what I will be able to tell.
Next question, let me take from Jigar Walia. He's asking a very interesting question, saying, can you help distinguish Fermenta's vitamin D business with Dishman Carbogen's vitamin D business, which is also an acquisition from Solvay, including Netherlands assets? Any thoughts out here?
See, Dishman, we have really not seen their product in vitamin D3 API or in animal feed since a long time. However, they have a beautiful analog business of vitamin D, which is a very interesting product. But we have not seen the plain vitamin D of this yet.
Okay. Moving on, next question I'll take from Khushbu Dadia. Due to the increase in D3 consumption on human side because of COVID, do we see our revenue mix changing as there is a difference on gross margin front and Ebitda front from both animal and human?
But on volumes, I think we should see a decent jump over the next 2-3 years, especially with this immunity, COVID, etc. Revenue and margins, unfortunately, it is subject to the volatility that happens in the animal side. And if it was just volatility of 20, 30, even 40, 50%, I think it would have been easier to try to pick some numbers. The volatility is sometimes 300, 400, 500% up and down cycles happen. So it will be difficult to peg how the revenue mix because of the volatility will change. If it's a stable with only 10-15% up and down, I think definitely the revenue mix should change more towards the human side as we move forward.
Okay. I'll take the next question from Tarang Agrawal. What is the dollar value of vitamin D market for human consumption and animal consumption? Any comment on that? Do you have an approximate?
Again, they are not comparable products. Let me caution you first that don't try to compare. Human side is between $2,500 to $3,500 per kilo is what is the normal average, depending on the size of the customer, the requirement, etc., the volumes and etc. On the animal side, it is ranges between $10. We have seen it.
No, so I think he was asking the market size.
size.
Not the price trend. Do you have any estimate of how big the market on the animal and human front is?
Yeah, but as I told you earlier, the market size is about 10 to 12,000 metric tons on the animal side, and on the human side, it is about 35 metric tons.
So then just multiply that with their numbers. Okay. Let's take the next question from Narendra Arora. What is the status of our Sakya plant?
Sakya, I think we got our environment clearances at the beginning of this year. As I said earlier, we are looking at adding more products and maybe even making composition of different products, which we call as premixes. We are currently in the planning stage. So as and when we are ready with it, we will hopefully start soon. If not this financial year, definitely at the beginning of the next financial year. We earlier estimated an overall overlay of around 200 odd crores would be the investments, but we will take it in stages. We will just not go for everything together. We will add incremental products and facilities.
Okay. Couple questions coming on the real estate side. First of all, why are we in real estate? What is the history behind this? And also, are there any plans going forward to demerge the real estate business from the core business, or any monetization plans here?
Let me correct everyone. We are not into real estate business because we wanted to enter we did not enter real estate business. This was hereditary. I think our plants, when we were a formulation company and a vitamin D3 manufacturing company before it was transferred to Fermenta Biotech Limited, we had this land asset after we shut down all those operations in Thana. So we inherited that land because of our past history. Even the CJ House facility that we have was our office earlier when we were a full-fledged pharmaceutical company. Even the land in Takawe that we have about 45 acres was at one time, before we sold Crocin, was meant for manufacturing dry formulations, including mainly Crocin. So we did not enter into real estate. I think I would rather put it as we have these assets with us. Yes, we would like to monetize them. We are in the market, we were in the market and are in the market for that. But with this COVID thing, I would not be able to estimate or give a opinion on when and what will happen. I think we'll have to wait and watch for some time until this all settles down.
Okay. Um, uh, Another question from Khushbu is, can you update on the technical issue faced by one of our largest vitamin D3 customers in Europe at their production facility, and thus how it impacted on our revenue? So what's the update here and why it happened?
We unfortunately are in the same situation still. I mean, our customer is still in the same situation. We still do not have visibility of when he will be able to sort out all the problems and issues that they have been facing. Fortunately for us, we have been, as I told you, we have currently a very small market share on the animal side. So from that point of view, we have been able to maintain to a large extent the volumes between different customers to a large extent, not completely offset the volumes of this customer, but maintain by getting more customers, etc. The price has definitely played a much bigger role in last year's thing.
Okay. Let me take the next question from Ashi Anand. If you can explain further, how many players are there in China? Is it a highly fragmented, or are there a few large players? How much does the ban on alternate cholesterol sources impact our competitiveness? I think you touched upon this. If you can just elaborate a little bit.
China, as I mentioned, I think I mentioned 4 names, which would be the larger players. The rest all are pretty small. Out of these large players, again, Garden is the largest player. I think to that extent, it is consolidated within these 4 players, and most importantly with Garden. The other players other than Garden have other products and other vitamins. Garden is again a purely vitamin D3 company. And they are the ones which are completely backward integrated into cholesterol and its derivatives, etc. So to that extent, it is consolidated. There are smaller players, but we are not clear from what stage of production that they manufacture vitamin D, whether they do it right from the starting stage, from cholesterol onwards, including photochemistry, etc. We are not sure. But these 4 players definitely are serious players. In terms of advantage to us, I think we are also backward integrated, other than the difference in volume-based efficiencies. I think we are well placed. We are confident that the volume-based advantages will be nullified with our innovative and improvement on efficiencies continuously.
I think somebody else asked the question, and I think you covered it, but maybe just for repetition's sake, how much would China be of the total market, controlled total market of vitamin D3? Percentage, approximately.
Again, it will depend on animal and human.
Right.
On animal, it should be closer to about 60%. On human, it will be closer to about 30-35%, I think.
Okay. I'll take a follow-up from Ashi Anand. Prices of vitamin D3 had moved up significantly last year, post which it has come down. What was the reason for the sharp jump, and what is the outlook going forward? What explains the high volatility in vitamin D3 prices? If you could just give a broader understanding on, what drives the vitamin D3. Is it a supply-driven issue? Is it a demand-driven issue? And obviously for animal and human separately.
Mostly supply-driven. That as far as we have noticed. Last year, there was a little bit of demand-driven also because of the African swine flu and culling of a large proportion of the pig population in Southeast Asia, especially China. So it is mostly supply-driven that this volatility we have seen. And something very strange, I think most of the vitamins we have seen are volatile, and especially in the animal feed segment, sometimes even in the human side, but on the animal feed segment. China, there are various reasons, right from closure of factories because of environmental reasons, because of Olympics, because of UN conventions, etc. I think time to time there are issues like that as well.
Okay. I'll take a question from Neeraj Mansinga next. What is the replacement cost of a plant if someone puts up a greenfield facility? Something of our size, whatever is our largest plant, yeah.
Maybe at least close to 300 crores, I would say minimum.
Okay. Next question I'll take from Anupam Agarwal. What is the optimum plant utilization level for us? At those utilization levels, at every 100 rupees of investment in capex, how much sales can be done and what working capital is needed for that? So,
and Sumesh ji will take this question.
It's very difficult to put across from a sales point of view as to how would it, how the returns. I'll just answer it from a return on capital or return on the assets point of view. It's going to be a little bit difficult to answer it because the sales is going to be very different when it comes to animal side of it. The prices are something which drives it completely. And as Satish had said in his presentation, that this is a plant until an intermediary level. It is the same same manufacturing unit which is being used. So I can't differentiate between both the manufacturing units and then put it across as to what is the return on asset which will happen on the plant if I was to invest 100 rupee into it. The capacity utilization point of view, we normally always are at an optimal capacity utilization, as in when we clock in closer to say 85-90%, we try to increase our capacity marginally by another 15-20%. So we aren't too optimistic at any point of time in spending purpose which is there on the capital assets. Anuj, I don't know whether I have answered the question, but it's very difficult to work out a return on asset point of view.
Maybe I think we are putting up we are doing a little bit of capacity expansion.
Yes.
So, and that's going to lead to almost 20% of our rise. If we do the math that way, and we are spending approximately how much for that capex?
So we will be spent. So we are taking a capacity increase, which is there. But again, this capacity increase is at the intermediary level, not at the final product level where it will happen. The investment, what we are putting in is going to be close to 30 crores. So until the intermediary level, the product is the same. There is no differentiation whether it is going to be utilized for my human side or animal side. It's completely fungible.
So very difficult to answer this.
And then I can work out based on my demand as to what is coming in. That's how we normally see as to where do we want to then from an intermediate level take it on whether animal side or the human side.
Understand. What is, I think his other question was, what is our optimum per plant utilization levels for us?
So I say that we are close to always 85-90% utilization of my plant.
And working capital for this?
So working capital, do you want to put me in the number of days where it will come?
Yeah,
in,
sure.
So the total net working capital number of days should be close to an optimum level of around about 90 days or something. We would be pretty high at this point of time, but there is a reason to it because an inventory build-up has come into it. So if I was to negate that part of it, and that's for a strategic reason. So if I was to negate that part of it, we should be close to 85 to 90 days of a working capital.
Okay. Another follow-up from Anupam is, if you could explain that, I know we don't give this, but what is the difference in margins between human and animal feed? Is there a difference? And if so, how much is it?
So from a gross margin point of view, I don't see there is much difference between the margins of both of them, considering that the prices of animal feed would be closer to say $20-22, which is there. So if I was to take that kind of an assumption, then I don't see there is much of a margin. And this is from a gross margin. I would not be able to put it from an Ebitda margin, but from a gross margin point of view, there isn't much difference between an animal and a human side of it. But me knowing that animal side is volatile, or it can go down, it can go up, but there isn't much difference when it is closer to say $19 or $20 for animal feed.
Okay. Next question I'll take from Ishprit Kaur. What is our client concentration? Do we have a client concentration? What would be our top 5 customers, approximately percentage of our revenues?
Satish, would you
Okay.
like to take it?
Yeah. On vitamin D3, I think top 5 clients would be close to about 25% of the market share of ours.
Okay. So 25% of our revenues would be top 5.
25%.
And the balance 75 would be how many clients?
Anuj, we have more than 300 active customers worldwide.
Okay. Okay. Another question from Anupam Agarwal, maybe Sumesh ji, if you could talk about this. Another financial question is, what will be the benefit from the backward integration in terms of gross EBITDA margins? And when will this start clicking in? Approximately how much this will add to our margin front?
So the total capex, including the interest part of it, we assume the cost is close to 60 crore rupees, what we would be spending on this backward integration plant. We see an ROI coming in over a period of 4.5 years on it, which is there. So that will give us an indication as to what is that additional margin which we are looking to come because of the backward integration plant, which is there. When it will click in, kind of a thing, I think so the full blow of it will start clicking in maybe in the 3rd or the 4th quarter of the next financial year. The plant would get capitalized now. However, the full blow of the benefit is what would take another year or something, maybe the 3rd quarter of the next financial year is when we will be able to see the benefit coming in.
Okay. Next question I'll take from Viraj Mahadevia. What are the Chinese? Why are the Chinese players predominantly in the animal segment and not the human segment? What is the reason behind this? When do we see, and also when do we see a recovery in animal prices and volumes?
As far as the prices, China with vitamin D in animal mode, I think obviously the volumes are large there. As I was mentioning, 80% up to 80% of the volumes going to animal side. I think China, as usual, the volume, it's a volume game, and lesser headaches in terms of, as you know, the regulations and the process you have to go through, right from manufacturing to acquiring a client on the pharmaceutical or human side is pretty time consuming and challenging. Not so on the animal side. And of course, the volumes are on the animal side. So that is, I feel, is the main reason why their focus is there. You were asking me something else. I forgot, Anuj, apart from this.
Sorry, I'll come back to that. I've actually dismissed the rest of that question. Let me go to the next question from Nirag Shah. He says Zenjing Gardens is coming up with additional capacities which are going on stream by Q4 CY20. With it obtaining CP certification last year, how do we see impact on the food grade or human side vitamin D3 sales or prices going forward? Any thoughts on that?
Garden is... I don't know how much capacity increase they're doing because if...
he says it's about 540 metric tons of food grade D3.
Again, 540 metric tons of food grade is, I think the market size on the food grade must be closer to about 3,000 or 4,000 metric tons of that particular format he's talking about.
Mm-hmm.
So again, currently we do not have any meaningful market share to talk about on this particular product format. There, I think we also are going to come sooner or later with a particular product for that format, and we will also gain market share over there.
So this is different than the human side?
It's on the human side, but it is a particular format for particular applications. What we currently sell is mostly API on the human side and some oils, but the powder formats, we have very, very limited sales because we still are working on getting a very good formulation out. As and when that happens, I think we will also gain market share. China getting CEP, there is one more company that is other than Fermenta and DSM. This will be the third company which will have a CEP. But everyone will have their market share, and it's a growing market. So we are not too overly concerned with that. In terms of capacity expansions, I think also China plus one policy will always help us. Between DSM and Fermenta, of course, Fermenta is a much more reasonably priced product than European DSM manufacturer, and we are, of course, more competitive. We don't think so. We are less competitive than China, that we should be worried with the capacities that they're coming up with.
Okay. Another follow-up from him is, when will we be able to manufacture meaningfully large quantities of 25-hydroxy vitamin D3? Any thoughts on that? And also, if you can elaborate on the scope and opportunity of this product.
It will take time. I think 25-hydroxy is gaining momentum even in the animal side, especially in the poultry industry. It's a derivative of vitamin D, which is the actual active form within the body that plays the most important role of vitamin D. On human side, again, it's a very potent molecule. On human side, specialized requirement on pharma side, it is used. In acute cases, it is used. But it will slowly gain momentum. In terms of our situation, I think we are trying to get manufacture this product. Currently, it's at lab level. We have done our lab level trials. We are looking at maybe piloting this financial year. Hopefully, if all goes well, maybe in the next 2 years, we should have a product in the market.
Okay. Another follow-up from him is, we have given an ICD to an entity for collaborating for a product for cholesterol from fish oil. What is the exact arrangement here? Are we using this cholesterol as our raw material? How cost effective it is? And do you have any plans of bringing such manufacturing assets under our fold in case it is successful?
See, as a company interested and invested into vitamin D3, we are always looking at different sources of cholesterol. While we did not want to go the big brain matter and animal, bone marrow matter, we were looking at always other sources. So one of the sources we found was fish oil. After you extract EPA, DHA, those nutritional products, omega fatty acids out of the fish oil, the residue still has a lot of cholesterol content. Compared to sheep wool grease, sheep wool based cholesterol, this is definitely cheap.
Okay.
We did not have any manufacturing facilities ourselves. So the IP is ours. We developed the product. We went to one of our toll manufacturers who also manufactures some other intermediate for our other API. We went to him and said we want to scale it up there and produce there in their facility while we concentrate on the backward integration for wool grease. So we have done that. It is successful. Currently, we are not using it for vitamin D3 production, but we are selling that cholesterol as it is in the aquaculture market, that is for the shrimp feed, as a shrimp feed. So this is what we are doing. Plans on bringing into our own facility, I think we will see how and what all facilities we are putting up in Sakya and whether it makes sense to put this also into that facility or not. I think once we have more clarity on other plans for Sakya, we will think about this.
Okay. Sumesh, there is a clarification on this particular ICD by Manan Shah. There is an amount of 5.81 crores has been adjusted against principal or interest for this. Can you clarify?
Yeah, so it's an combination of both, which has been repaid by DK Pharma to us. So majorly is towards the interest part of it, and a small part of it is on the part of a principal. But let me also clarify that by the end of this financial year, we should be in a position to nullify and clear off the complete ICD, which is there. So they should be able to repay the complete ICD.
Okay. Another follow-up from Manancha and Sumesh, this one's for you only. What is the reason for substantial increase in inventory? It has increased from about 50 crores in FY18 to about 129 in FY20. So what was the main driver for this?
It was more of a strategic reason than anything else. Like we spoke about, that we were going into a backward integration for cholesterol, which is there. We wanted to be adequately stocked with the cholesterol in our plant at any point of time, in case any hassles were created by any of my suppliers, knowing that we would be getting into backward integration. So it's a strategic reason why we had done it. And it's majorly to do because of the cholesterol that we had stocked in.
Okay. Another follow-up from him is that, where are we currently procuring our raw materials from? And have we since started facing any issues in raw material procurement, which is the reason why we are moving to finding different sources of cholesterol from fish oil. Any further thoughts on this, Satish?
See, like vitamin D market being niche, even the cholesterol manufacturers are very niche, very few players. It is not again easily available. This also could be one of the entry barriers for new people. Finding a good cholesterol source is also difficult. In the long run, I think we need to keep finding other sources. For example, sheep being grown for wool purposes itself is going down, because I think getting woolen clothes anymore is a dream for a lot of people in terms of affordability. Cotton and other mixtures with synthetic and other things are the ones which are being used everywhere. So we are constantly looking for other sources. So this is one of the sources that we found, which we felt we could commercialize. If fish oil is being used for other nutritional ingredients, we don't see any reason why it should not be, in principle, be allowed to use for vitamin D3, at least in the animal feed purpose. It is definitely cheaper than the sheep wool based cholesterol. We are still yet to start any regulatory process to use in our vitamin D3 purpose, but that we will definitely plan soon. First, we want to settle down the technology, getting it right, and then getting the right quality and all those things. And then later on, we will look at it. Our search for cholesterol is just not restricted to fish oil also. We are, in fact, in our IR, we have given a sheet with patents that we've applied for and pending approval, in which we speak about not only 25-hydroxy, but also vegan D3 from vegetarian plant-based oil sources. So we are working on a lot of projects. So this was one thing that we could quickly commercialize as far as up to cholesterol is concerned. The next steps we will take in the near future.
Okay. Gokul Maheshwari is asking for clarification. In one way, we are saying that the growth has been about 10% in human side and 5% in animal side. But now you're looking to scale up and expecting the market to grow. What gives you so much confidence that this will grow in the next 5 to 10 years?
I think the overall market growth has been at that, but Fermenta's growth has been much higher. If you look at even the last 10 years. With this nutrition, COVID, those kind of indications and the research and the consumption growth, it will definitely grow higher. As regards the animal side, I think we still have a very small market share, maybe under 5%. So the market share growth itself should help us grow at a much healthier pace than the market growth size. There will be ups and downs, consolidations. There will be disruptions periodically. Like for example, as we speak now, the animal meat industry is very subdued. The restaurants, hotels, airports, airlines, trains, the entire travel itself, apart from casual dining outside, has gone down a lot. Meat consumption is subdued currently, but things will improve. There will be disruptions from time to time, but things will improve. So us growing a little bit in our market share. Here I must also mention that until recently, we did not have a formulation which was acceptable for all the customers in the feed industry. This we started this new product this year in Germany, or last quarter of the last previous financial year. By contract, we developed the formulation. IP belongs to us, but we started contract manufacturing it in a third party. So we feel that this product, we are sure that this product will be acceptable to more number of customers. So we should have our growth in that side as well.
Okay. I'll take the next question from Ishpreet Kaur. Again, customer stickiness. What is the customer stickiness? What is our pricing power on this also? Any comments?
I think on the human side, it is more driven by quality of service and consistency and accessibility to the company. How available, right from our sales team to our quality team, is available to the customer. So it is challenging for us. Also, it took time for us also to get new customers. It's not easy for, especially in the pharma sector, to change, shift your sources, especially on a molecule like this, which is contribution into the cost of the final formulation is very, very negligible. So that is one thing. On the other side, I think on the animal side, it is more price sensitive. There, I think the China Plus One policy should help us tremendously.
Okay. Are there any differences in prices of FBL versus China? Or is it a market driven? Everyone sells
on the animal side, it is mostly market driven. On the human side, I think we do get a premium.
Okay. Next question I'll take. There's a couple of questions that are just asking the same thing. And Sumesh, if you just can clarify the capex done so far until last year, and what is the plan for this year and over the next few years, and what kind of return expected on that?
So the gross block, if I was to talk across from, say, FY20, we were close to 136 crores is what my gross block would be there. The capex, the capitalization would happen with regards to my cholesterol project in this financial year, which should be close to around about 62 crores, which is there. And like Satish had said, that we are looking for an expansion also, which is happening. Which ideally should get completed by the end of this financial year. The target is towards that, but its real capex will come into consideration in the next financial year, which will be close to around about 30 crores.
Okay. What is the kind of return ROC you are expecting from this?
It's again the same question which I said. So let me put it this way: when it comes, so let me break it up into two parts of it. One part of it, when we talk about from a backward integration, I very clearly said that we are looking at a payback period of around about 4.5 years or something, which is there. So maybe that part of the question answers, which is the second part of it, which is for an expansion, which you are looking at the intermediary level and everything. As I said, it's going to be difficult to really say as to what the return is going to come in from that.
Okay. Sumesh, another question from you from Monisha Wadhwani. What are your thoughts on debt reduction, working capital management, real estate monetization, as well as cash utilization?
Perfect. So let me just clarify on the debt as to how the parcel of the whole debt is really sitting in the books of account at this point of time. We have a debt of long-term debt of around about 75 crores, which is there. I would not use the word real estate, but from the rental business, what I'm earning in kind of a thing. And this 75 crores is fully serviced by the rentals which is coming from the properties which we hold at this point of time. So the second part of a long-term debt is from the point of view of backward integration on a cholesterol project. This will again pay for itself since it has a payback period of 4.5 years. By that time, it will pay off the complete part of it. The third part of it is going to be another capex of around about 24 crores, which is there. So all this put together, long-term debt is around about 148 crores. I am sitting currently at an utilization of approximately 90 crores on the working capital side, which is there. Let me just clarify also here that the working capital as well as the debt which is there for the backward integration and the debt for the expansion, most of it is towards in foreign currency, where the rate of interest is close to say around about 3.5, 4%, which is there, which is a net cost which is coming to me. The reason being we enjoy a natural hedge since we are 80-85% export oriented company, which is there. Other than that, we are sitting on a free cash flow of around about 35 crores currently. We are looking to, since I said that we have increased our inventory level for a strategic reason, as soon as that coming down, we will automatically see that there is a debt on a working capital automatically reducing substantially, which is it.
Okay, so sorry, go ahead. Go ahead.
No, so I think so. That was the part. There's a question which was there from a monetization.
Cash utilization and yeah.
So from a so cash utilization, as I said, that I'm sitting today on a 40 crores of a 35 to 40 crores of a free cash flow, which is there. We aren't using anything to repay it. Like I explained, most of the debt are self-repayable, which is there from the businesses, what they're earning at this point of time. So I would prefer to sit on that cash. Plus, most of my debt is on a foreign currency, which is at a very low interest rate. So that should also not hurt me. If something happens from a monetization point of view, maybe yes, definitely we will see at that point of time as to what makes sense, whether to repay the debt, which is a long-term debt kind of a thing, which is there, or what other opportunities are available to really go into an expansion mode at that point of time.
Okay. A few people are asking about the current price trends of D3 and Animal. Any, can you just guide us on what's happening currently?
The current price, it's hovering around $20, between $20 to $23. It's been
for the animal side, and for the human.
Human, it's pretty stable. I think our listed price in India is about 2 lakhs per kilo, I think.
Okay. Next question I'll take from Mr. Devesh Kabra. Will expansion into the nutrition segment be margin accretive? What current capabilities do we have, and what will be synergistic to our expansion plans into these new products?
See, I think as far as capabilities, manufacturing and product development, I think we have all the capabilities required in terms of the technical strengths. Of course, we need to invest into the manufacturing plants. As far as the R&D is concerned, it is very well equipped, both not only soft in terms of human capital, but also in terms of equipment and other infrastructure. We are well equipped to be able to develop all these products that we are talking about. That is as far as our position in terms of being able to develop and manufacture technical part of it. The other part of it is in terms of our capabilities to be able to enter the market and garner and gain market share. I think we have a well-established set of partnerships and relationships across the world, not only in India. I think in India, we more or less, you can name any pharma company that is manufacturing vitamin D, we are there with them. Similarly, globally also, we have very well established and strong relationships that we have built over the last 10 years or more. In India, we have this relationship since last 40-50 years. And this was built on credibility of our products and quality of our services. So I'm sure that people will. And there are not too many large players in this segment, either in India or globally. Very few players are there. Large players will hardly be about 3 or 4 or at the most, that's it. In globally also, there'll be 4 or 5 large players who are catering to global markets. So I think there is space, there is room for people.
Okay. Another question for in the similar line is about from Vinit Bolinchkar. Vitamin K. Can you elaborate on both the market size in terms of global and domestic, and who are the players here, and what's the potentially opportunity for us?
Vitamin K1, I don't think so. Anyone in India is manufacturing it. Unfortunately, I don't have market size and numbers offhand, but it's a very niche market, a growing market. It's a very niche product. Very few people manufacture this product.
Along those same lines, Srinidhi is asking, what would be the total contribution from these new products, say 2 years or 3 years down the line into our whole revenue pie? How much will you, or what's your vision, or what's your thought process that how much will vitamin D3 be, say 2-3 years down the line versus these new products?
In the next 5 years, we hope that the other products should contribute almost as much as vitamin D is contributing today in terms of revenues.
Okay. So a couple questions on another follow-up from Srinidhi is in terms of absolute revenue contribution from astaxanthin, omega fatty acids, hydroxyvitamin, and vitamin D3 from veg source. Do you have the absolute revenue contribution?
I think I've just answered the same question.
Okay. Okay, let me take the next question. I think a lot of these have been answered, and some of them are old, so I have to just go through them. What is the sensitivity of wool prices to D3? Have wool prices been crashing? So again, this comes down to the prices. What drives wool prices?
Wool prices is driven by, I think, the textile requirement, nothing to do with vitamin D3. There is no correlation that way between wool prices and it is more a demand-driven thing. If wool demand grows, I think...
and then what is the impact on cholesterol for that?
Because wool grease is the starting material. We have not... 10 years back, I think about 10 or 11 years back is where we saw a major disruption in the wool prices. They just went from $1.5 to upwards of $5 or something. It will be better to put it in cholesterol terms. A $30 or a 30 euro product went up to 100 euros or dollars in a period of 1.5 years. Since then, it has been fairly stable. Now, its impact on the final cost, of course, if there is a variation of this kind, it does impact. But a 10-15% or a 20% variation on wool grease or cholesterol really does not impact the final product that high.
Okay. Another question, a question from Anupam Agarwal. Do we have any planned inspections from health regulators, Indian or international? If yes, when was the last inspection done? And are we expecting one anytime soon?
I think USFDA was the one that was last that I can speak about, that they inspected our Kullu facility in January of last year, I think. That was the second visit of theirs. Otherwise, in terms of plant visits and audits, we face them almost every month prior to this COVID period, of course. Almost every month, whether it's a regulatory authority or a certifying authority or customers. This is a part and parcel of being in this sector. I think monthly there could be sometimes 2 or 3 visits also by different authorities or customers. So it's a constant process. USFDA had come last January, was the second visit that they had.
Okay. A few people are asking about our, water management business. Can you just elaborate on that? Also, the solid waste management. and with Bharat Abhiyan Phase 2, which focused on solid waste management. Could you tell us about the vision and plans here?
See, this is pretty interesting segment. We chose water waste management as the first step. We focus on non-chemical waste. We do not focus on chemical waste. What we have seen is this is of such importance for this country. I don't have to tell anyone. I think it pains to see the condition that we have left our lakes, rivers, and our shores with this waste. People who have been so far looking at wastewater management engineering solutions. This is a biological solution is required. Fermenta is a biotech company as well. We understand biochemistry is one part of it, but we understand bacteria and their nature. This is not something that has to be purely looked from a engineering solution, but you need to look at from a biology solution. So I think we bring in that expertise. We have started small, but we are already being wherever we have been so far. The few clients that we have and the few clients that we are negotiating and discussing with are highly appreciative of how detailed and with what kind of understanding of the treatment that should happen that Fermenta is coming with. So hope to do good in this business, but we come with a biotech solution point of view apart from just a pure engineering solution point of view for this waste treatment. We need to understand the biology of the treatment.
Okay. Let me take this next question from Sunil Jain. Companies, the gross margins, and Sumesh, I think this is for you, in Q1 is similar to Q4, whereas the management had indicated that prices of, increase in animal D3 prices, which should lead to better gross margins. So what is the reason for this?
So one thing what has also happened is we have seen, so we had not indicated that the prices are going to be, or the margins are going to be different. So I don't think management had ever said that the Q1 would be different from Q4 or anything. Having said that, what has happened is the cost of the freight and everything has substantially gone up during the period of COVID, which we have seen. Which has impacted to a large extent both my inward as well as the outward freight which has come in. So that has been one of the major reasons where we have seen that there is a reduction or the margins have not changed substantially from what it was there in the previous quarter.
Okay. We've gone way beyond time. I'll just take a couple generic questions. Sumesh, any plans of being listed on the NSE? Somebody's asking that.
Sorry, Satish, please.
We are discussing and evaluating that, Anuj. As soon as I think any kind of clarity is there, we will surely get back.
Okay. Another last question I'll take up now, and I know there are a lot of unanswered questions, but I've tried to get through all of them. What is there any benefit of the PLI scheme of the central government to the company?
Currently, from what we manufacture and what immediate plans we have, no. That answer is no, as far as Fermenta is concerned.
Okay. We've crossed, we thought, I still see a few questions. Unfortunately, we've run out of time. Participants, if there are further questions, please reach out to us. We'll try to answer most of these questions. A lot of the questions that I see that I haven't asked, many of the answers to them are in the presentation with regards to prices, etc. If there's any further questions, please reach out to us. We'd be happy to answer them for you. Thank you so much for participating, participants. Management, Satishji, Sumeshji, thank you so much for this opportunity. Any closing comments from you, Satishji, before we end this?
I think what I would like to say is it's been a very exciting journey for the company, especially in the last 10 years. The entire team is exceptionally excited with the new things that we are looking at. Please, we are not one of those companies where you should look at quarter to quarter. We are not an IT sector company or anything like that. We are in a niche market. Please look at our history from the last 10 years and then you look at us in the longer period. You will, I'm sure, start liking us and being excited about us like we are.
Thank you so much, Satishji. Thank you so much, Sumeshji. Thank you, everybody, for participating.
Thank you, everybody. Thank you.
Thank you. Thank you
Have a
so
good
much.
day.